Hey everybody, this is Dave Stevens, and I'm glad to be able to contribute a few minutes of my time to all of you who are part of Basecamp. Just like you, I'm working from my home. I run a consulting practice these days after decades in our business. Not sure all of you are aware, I actually started as a loan rep in Denver, similar roots to Sarah, and took my origination skills and capabilities and moved up and ran branches and regions and divisions, and ultimately got recruited to Freddie Mac to run the single family business there, and had a great run there, almost a decade. I was actually recruited from Freddie Mac by my number one client, which at the time was Wells Fargo. They were our biggest customer. Spent a short time there as the executive vice president running wholesale lending. And then went to Long and Foster Real Estate, which if you're on the East Coast, you know who that is. But at the time, it was 14,000 real estate agents and just under 500 offices, and the largest privately held real estate company in America. We had a mortgage company, actually two of them, title businesses and more. I came in actually to run everything but the real estate company, but Wes Foster, after a little over a year and a half or so, promoted me to be the president and chief operating officer of the entire company, which included real estate and everything else. Would have stayed there, frankly, had Barack Obama not been elected, and we were in the middle of a housing crisis and the Great Recession. I got a call from the White House asking me to come meet with some folks there, and before you know it, they were asking me to quit my job, join what's called the housing team, and work on issues to help get us out of that recession, which proved themselves actually to be pretty successful. When I left the administration, after a couple of years at the midterms, when a bunch of us left, I went out, headed back to private practice. The Mortgage Bankers Association reached out to me, asked me if I'd be interested in coming there to help them, and I did. And so I ended up as CEO of the Mortgage Bankers Association after a long run, beginning as basically a loan originator. You know, we all end up going down very unique paths. And how we get to where we ultimately are going to land requires risk-taking, dedication, desire to learn. You have to be goal-oriented, competitive, and more to succeed. You all know that because you're part of this program. I left the MBA just a couple of short years ago and was heading into retirement, but a few people started reaching out, and I opened up a consulting business called Mountain Lake Consulting. And I sit on the board of a real estate investment trust. It's listed on the New York Stock Exchange, called Dynex, probably the best REIT in America. I consult for a few firms, one of which is Fairway, and it's a great pleasure supporting Jake and Sarah and the team. And then I work for a couple of other firms in a variety of different spaces, and I work on policies. You still may read my stuff in the media, and I'm certainly going to speak up when things are happening that I think are harmful to our business. So there we are. I always tell people that, you know, my favorite job when I was a loan rep, I thought I'd be there forever. And, you know, I don't want to call it accident. I wanted to learn more. I wanted to learn about the secondary market. So when I heard about this role at Freddie Mac, and I'd been working for a portfolio lender, a savings and loan, for 15 years, I actually wanted to go learn about capital markets and how that worked, because I didn't know that just being on the origination front. And, you know, I didn't go for the pay. There were a lot of times I took jobs that paid less. When I went from an originator to a full-time manager, it was actually less money. And we moved a lot around the country, opening up new branches, but I learned how to do that. I learned how to build organizations from scratch, to hire, to fail, to succeed. That really helped build my management capabilities, understanding profit and loss balance sheets and more, and working in a complex, integrated, large financial system was really helpful. Freddie Mac was the same thing. Again, learning capital markets, dealing with hundreds of $1 billion in contracts every year was really exciting. And likewise, when the administration reached out to me and asked me to come take a job there, I knew my salary was going to drop to about 10% of what I was earning. But it was a time to help my country. And you don't say no to a president, especially when you're in the middle of a recession. And so you jump in and try to help. And running a trade group taught me a lot. It taught me about how all institutions bring value to our country's housing finance system, and how the way you lead in policy is to create a big, loud voice, as powerful as possible, and use that voice in an effective way. And I'll tell you the core message I've learned all the way through this period of time is that sales skills matter, communication skills, whether you're selling a loan to a consumer or selling a real estate agent on having you be their trusted partner in the process, or selling policymakers in Washington or members of Congress. It's all about communication skills. But I've been in this business since the early 1980s when we had no credit scores, we had no internet, we had no cell phones, didn't even have pagers in the early ages. We didn't even have fax machines or any of these systems to help us be successful. And as all us old timers can tell you, we went out on realtor calls every day with a roll of quarters, or a roll of dimes in our pocket, depending on how much a phone cost at the time. And we'd go make literally calls on real estate companies day in and day out and come back to pink slips in our box with return messages. It was slow, but that's how we began. Suddenly technology started coming in, really not in the 80s as much as it was in the 90s. Automated credit score models didn't start even kicking in until the early 90s. LP, Loan Prospector for Freddie Mac, wasn't kicked in until the early 90s. Introduced, it really didn't take hold until the late 90s. So what we've seen in developments in our industry was a very slow, slogging process, going back decade upon decade with very paper-driven, inefficient, non-technology-based financial system that supported the mortgage business. Today, technology is moving at such a fast pace that the real question all of us have to keep asking ourselves is, what's going to be the Uber that changes the mortgage model? Just as Uber destroyed the taxi business, or Amazon changed brick and mortar retail forever, and more. Airbnb is changing the hotel industry to the point where Marriott now has houses that you can, luxury homes you can go rent for a night here and there. There are people coming in to Uber our industry, and the real core question for me is, at what pace will technology eliminate or significantly reduce the value proposition, the value that a loan officer brings to the job? In the old days, when we started, every bank or thrift had a different rate, a different product. We had a different index that we tied our adjustable rate loans to. We had ALMs, VRMs, AMRs, ARMs, cost of funds, treasury securities, different treasury indexes that were used, all for adjustable rate loans, different capping structures, different teaser rates, points, qualifying guidelines, and more. And because there was no internet, realtors and consumers depended on the phone and personal interaction by a loan officer who could add value to that process. It was friction. And friction usually requires a lot of human intervention. The lack of friction, the greater the efficiency, the less important people are. You can see it in factories. You can see it at banks, where they're discouraging you now to go into the bank and trying to get you online and use ATMs, to airlines that charge you a fee if you want to talk to a human being. Our cycles of industry are transforming how we deal with everything from soup to nuts. And so the question is, how will you retain your value proposition so that you're a necessary part of the process? If a borrower calls you and the next thing you're doing is referring him to your website, here's my link, fill out the app online, I really wonder how long you're going to be needed to make that directional point. Some may say, well, realtors like to work with loan officers. They want to keep control of the process. Yeah, that's true for older realtors. Younger realtors who are technologically savvy, comfortable in a technological environment, our children, my children anyway, who would rather text me than talk to me, and who would rather do things online rather than ever pick up a phone and call a human being and ask for help. I think we're going to see a wave of change. And I think the moment you recognize that and begin to realize your value and how to maintain that value is going to make a big difference. At some point here in the near term, a loan is going to be approved almost instantaneously. From the moment you input your information, your credit score is going to be checked, your deposit is going to be verified immediately online, your payroll is going to be immediately verified. It'll be instantaneous because at some point we're going to link everything systematically in this country, even into federal systems like the IRS, data bureaus, that will be seamless and won't require a 4506 form or something of that nature. So again, the key question is here, how are you going to develop your career to be more than just a rate quoter and a referral to a website? How do you make it in such a way that you're going to be a critical, necessary part of the value proposition going forward? And I really think that's the challenge for industry. It's not going to happen today. Today you're booming in refinance volume. And, given the time here, we can't talk a lot further about it, but I will assure you, if you look at forecast information, we're going to see the market contract by somewhere around $700 billion in about a year on a rolling basis, because we will have burnt out the refinanceable market. And then we're going to have a lot of loan officers for a smaller market. And that's going to be the real question is, how are you going to think about building your future going forward? So that's all I think about. That's what keeps me awake at night. We could talk about this a lot more, but I've gone on 11 minutes now, and I know that these things only work in short bits. So best of luck to you, and thanks for spending a few moments with me here today. Have a great day.